talk about a stock that has given a 45% plus return in the last 1 year. I am talking about Triveni Turbine, with the top management getting set to join us. If you look at the third quarter performance, what we've actually seen is the profit rising to 52 crore rupees, total income meanwhile at 337 crores in the third quarter, up from 233 crores a year ago. So with that, I'd like to now invite Nikhil Sawhney, who's live with us. Nikhil, good morning. This is Nayanthara Rai joining in from the Noida studio. I do remember that in the last quarter, you did promise a factory visit and an interview, which still hasn't happened. So let's hope in 2023 that does. Nikhil, good set of numbers that have come in, whether we look at the top line and we look at the bottom line, a strong operating performance. If you look at the corporate performance as well, it's a year that's gone by, the financial year, where we've seen succession planning with the disinvestment by Triveni Engineering in Triveni Turbines. We've seen a share buyback as well. What's next?
Well, Nayanthara, firstly, thank you very much for having me on, and open invitation to come down to Bangalore whenever you may like. So please let me know about that. About Triveni Turbine, yes, we have had, from a family perspective, a degree of succession planning to just get clarity on ownership structure between the family within the two operating companies that we have, which is Triveni Turbine and Triveni Engineering. But for Triveni Turbine in specific, as you rightly point out, we've had a record quarter from all aspects, not only in terms of turnover, in terms of profitability, but also in terms of order booking. As a capital goods company which caters to the markets of industrial heat and power and renewable energy power generation, the company is on a very good footing, not only to complete this year with a better Q4 than we have had a Q3, but in fact, starting off FY24 on a very good step. And we're anticipating very good growth in the next year as well. It's important to recognize that the market in which we cater to is industrial heat and power and renewable energy power generation. And both of these actually are in an upswing. We have an installed base in over 85 countries globally. And despite the signs of global recession, we actually have had an increase in our inquiry book in the international market by over 55%. It's important to recognize that about 50% of end energy consumption is in the form of heating and cooling. And especially when you look at it from the industrial or institutional perspective, this has to be generated on site. It's very difficult for it to be, disrupted by solar or wind, because electricity as a form of generating heat is reasonably inefficient, especially as you look at it from the perspective of industry. And that is the need for us to move towards a hydrogen economy. And Triveni Turbine, with a IP portfolio in excess of 315 or 316 odd IPs that we have, unique IPs that we have registered, is very well poised to cater and capitalize on this decarbonization and energy transition mix that we're undergoing at this point in time.
How much of your order book now is legacy order book? How much of your order book now is the new order book? Because the transition is important because of the volatility in commodity prices.
Yes, Nikhil, that's a great question. Our order delivery cycle is on average about 9 months. And so what you would see at any given point in time of our order book is that would be executed within the following 12 months. And in fact, we would have book and bill within a period of 3 months as well. So our end order book, which is in excess of 1,200 crores as of the 31st of December, gives you an indication as to what we may see in the following 12 months. But you bring up an important point about commodity pricing. And while our current revenues and turnover incorporate a commodity price at the point in time that the orders were booked, which were actually higher at that point in time, we've seen those come down, and that gives us good visibility towards possible margin expansion in the quarters to come. That coupled with the fact that we have a mix, the change in our product mix. As you see, execution on the domestic market carries lower margins, and exports do have a higher margin for us. And as we've seen, international order booking has been quite resilient. And so we see that contributing more significantly towards turnover, which again is positive for margins going forward.
Get that, and I'm sure the markets as well are liking that commentary. Great to have you on the show, Nikhil. Commercial obligations, so we're going to let you go on that note, have a detailed chat perhaps a little later once the earnings season, madness is subsided.